Welcome back. Canadian banks are set to begin delivering their latest set of quarterly results tomorrow. Bank of Montreal and Bank of Nova Scotia kick things off with results due well before markets start trading at 9:30 a.m. Eastern Time. Those results will likely be out in the neighborhood of 7 a.m. Eastern Time tomorrow morning. We're back with Andrew Pyle. He's Senior Investment Advisor and Portfolio Manager at CIBC Wood Gundy for his take. Andrew, what kind of results are you expecting for the banks this quarter? One thing they're certainly contending with is a slowing Canadian economy. And one thing they will surely be asked about on the conference call is the potential for a further slowdown in the Canadian economy due to the tariff threat from the United States.
Yeah, this is going to be a very tricky quarter for the banks, Paul, in terms of the language and the guidance around the results. Again, I think the results for the last quarter probably were okay. I mean, we've seen some decent employment numbers out of Canada. So, yeah, the economy has underperformed the States, and there is that threat, and we've seen businesses kind of reacting to that uncertainty. But I think the actual results probably are going to be half decent for the quarter. To your point, Paul, is how the banks deal with guidance in an environment where basically no one knows what's going to happen hour to hour with Trump. So they're going to have to be cautious. And, from an investor point of view, Paul, it's going to come down to, are the banks going to put more away in reserves to contend with this uncertainty or potential weakness to the Canadian economy, consumer demand? And if they do that, obviously we know what would happen to what happens to earnings and what would likely happen to bank stocks. But again, going to be extremely tricky this week as they paddle their ways through this.
Would you hazard a guess on what kind of numbers we might see on loan growth or loan demand at the bank? It's a difficult one to forecast at any point. Right now, we've got a slowing Canadian economy, rising unemployment. Those you would think are negatives for loan demand and loan growth. On the other hand, we have sharply lower interest rates versus a year ago. How do you think that may play out?
I think for the quarter, the two of them probably balance out, Paul. I do think you have some pockets of increased demand for loan growth, given the extremely, sharp cuts that we saw in rates over the second half of last year. Mortgage demand, again, I think is probably decent. I think the housing market in Canada is still holding its own. Typically, we would think of that market weakening off significantly if we were to see a climb in unemployment rates. I don't think that's happening. So I think on the mortgage side, things should be fine. Business lending, again, Paul, if there's uncertainty down the road, businesses are going to be less likely to invest in their operations and therefore perhaps less likely to borrow. So it really depends. Again, I think investors are going to be glued to the set, so to speak, on how the banks are looking at these next 6 to 12 months.
And I know you've addressed this already, but let's circle back to provisions for loan losses, which is a judgment call made by the banks. They each individually decide how much money they should set aside for loans that may not be fully repaid. And every dollar in a provision is a dollar that comes off profit, and indeed money taken out of provisions winds up right on the bottom line. What kind of trend do you think we're going to see there?
Well, provided that we do see a continued weakness in the economy, which would obviously be exacerbated by tariffs, I think the trend would be towards increased loan loss provisions. But, one's not going to do that on speculation that something could happen, because, again, if it doesn't happen, then you're basically looking at, pulling back those loan loss reserves, which obviously is good for earnings down the road. But I don't think the banks want to get into a situation here where, investors are now looking at volatility in preparation as opposed to volatility in simply what is happening to the economy. So, as I said before, Paul, I think it's going to be in how we frame the guidance going forward. And simply for a lot of these companies, and we saw it in Walmart last week, it's almost impossible to provide guidance in this current policy environment that we're dealing with.
You are neutral on the Canadian financials right now. Does that mean you're neutral on the banks themselves? And if so, why?
Well, I think some banks offer some opportunities. Again, we want to see what these results look like. We want to see the guidance, Paul, before we start making decisions there. As you know, some of the banks in Canada have been underperforming of late. Some banks have, one bank in particular has rebounded significantly from weakness that we saw last year. So I think if we like the guidance, I think the Canadian economy right now, while we still have this threat of the tariffs, there's a lot of positives going on. We talked about lower interest rates. If we were to see a decline or a drop in interprovincial trade barriers. I think that's positive for the Canadian economy. So there are some positives in this story. It's not all negative. And I think if we see good guidance from the banks, I think there's some banks you could be looking at picking up some opportunities in.
Do you think we're going to get that meaningful dial down in intra-provincial trade barriers? That's been talked about, as you and I know, Andrew, and other people our age, it's been talked about for decades. Do you think it's finally going to happen?
Well, call me an optimist, Paul, but I think this might be the time where Canada basically wakes up to the reality of why we don't have, or why we should not have, interprovincial trade barriers. And I think this is a point in time where we actually see some success on that. To your point, I've been looking at this for almost 40 years, wondering when not only interprovincial trade barriers, Paul, but when are we going to start to have meaningful trade negotiations with countries outside of the States and lessen that dependence. But I actually think this is a positive time for Canada, looking at those silver linings. And if that were to happen, some of the domestic stories in this country. And I know I'm going off topic, but even on the retail side, there's some positive signs here that domestic retailers in Canada could actually benefit from what is happening right now. And you've seen the boycotts that people are planning for the next few weeks. And so I do think there's some positive silver linings. But again, that tariff overhang really clouds the general outlook for the TSX.
Andrew, thank you, as always, for two good conversations. Andrew Pyle is